Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. This is the monthly chart review edition. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Hey, Barry, you ready for a trip through the monthlies?
I'm ready.
This is, and before we jump into it, this is I think, an invaluable exercise because it really does get you out of the day-to-day sort of short-term, what's the next, 20 basis point move. You're more stepping back and looking at the big picture here, right? What is the trend from a big picture standpoint? And it helps me sort of clearly think about, okay, where's money flowing in the big picture? I know you kind of feel the same way, Barry, but why don't you add your words as to what the monthlies give you from a perspective standpoint?
Well, it's the same thing. It's sort of a template, right? I mean, a lot of people look at multiple time frames, and some people even trade multiple time frames. So the monthly for me, and I tend to be heavy on the weekly, but I also look at the monthly. But since we've been doing this, and you talking about the commodities every month, it's become integral part, and it helps me really stay focused on the bigger picture and not get thrown off track by news driven spikes here and there, or even a sort of a sort of a sleight of hand move during the week, right?
Mm-hmm.
It's easy to get pulled into those. So I think I look at the monthly as a sort of the anchor, right? The grounding.
Mm-hmm.
And so it's always in the back of my head as a overlay or a template to frame the rest of the market, rest of the time frames, the lower time frames. So
yeah, well said.
Yeah.
Keeps us from getting stuck on staring at those shiny objects, if you want to use the vernacular.
And to chase them.
Right, that's right. Because as they have you staring at the shiny object of the 4-minute chart or the 30-minute chart, slowly they move the money into the bigger time frame and get the real moves going. Right. That's the way I envision it. Anyway, let's jump into it. That's a good perspective, but let's jump into it so we can rip through these. The first one we review, as I like to call as a proxy for risk, is Bitcoin. This chart has been, nothing short of remarkable in framing the action of the most volatile asset out there right now. And where are we now? Well, as we were talking beforehand, the big test from a monthly standpoint is going to come at this half square, which is, around the 43,000 level. If we get stuck under it, and can't get above it, it means we're going down here to 29,000 and probably going down here even lower, potentially to like the 16,000 level to sort of clean out this move on the downside. If we can get above this half square and sit on top, it opens up 56,000. And you were saying, Barry, potential, and I think that's a good observation. It gives us a potential 3 drive, maybe to an all-time blow off top here. Anything else you have to add on the daily? I mean, on the monthly here?
Monthly, just that. I think watch the half square, and a failure around that zone would open up the lower end. And if we can maintain that and build that as the next foundation, then I think 3 drives would be just about perfect, wouldn't it?
Mm-hmm. It sure would. And if we spaced it out time wise, you're looking at, a little more than a half square. It would be somewhere in here.
Right.
July, August.
Yeah.
Of this year would be the high. So we'll see how it plays out. Next on board is ES. I think the key thing with these monthlies on ES and NQ is, Barry and I were talking for weeks and weeks and weeks about this angle of ascent, and we're starting to have some problems with the angle of ascent. We pulled back, we broke the steep uptrend line. Now we're sort of testing it from the underside. But the key thing on the monthly on the ES is this half square. We closed the week below it. It's at 45.25 area. As long as we're below that, the full square is in play at 4,100. So that's the thing to watch is this half square at 45.25. If we stay below that, the weakness is probably going to kick in, and we're at least going to test this full square. If we can get above it, can they rally up and hit the full square? While it's possible, which is around 5,000. At this point, I don't think it's likely. The other thing is the timing here. I was doing some monthly counts from previous highs and previous lows, and a lot of these numbers are falling in around this March, April timeframe. February, March, April. So we're in the zone. We're in the zone from timing standpoint as well. What do you see here?
Well, I'm just staring at the steep run, and they can take 6 to 8 months to finish up. They don't normally just make a U-turn and drop. And so we have to watch this area. We could get stuck in a kind of a fairly long-term battle, like you say.
Like this distribution pattern here.
Well, just like that. So that's 6 to 8. I don't know, maybe 10 months. 6 to 8 months is usually what happens up in these highs. So
here's one with a false break.
And that's possible. But yeah, I think we're done with the steep part of it. And I was just noticing, if you put your square at the 2009 low, then we're very close to that full square. I know the where you have it works out, but if you drop it down, maybe an eighth, then it makes up an eighth up at the top, and it almost gets there in price and time. So right there.
Yeah.
And, that's close enough for our work.
Yeah, that's pretty damn good. So, price and time. Yeah.
So we could be there. It's possible, right? So. And I think from all the big cycles that we watch, it looks like it's in, and we're just playing along, see how it goes.
Yeah, the question is how do they effectuate the exit from here? That's what we're trying to figure out. All right, next one, let's jump on is NQs. NQs have done a really sharp reversal off of the full square with timing. And this one, I was noticing it earlier, man. It really, really hit the timing and the time and price right there. Just like the ES, we're stuck below the half square so far, right, which is at around the 14,850 level. As long as we're below that half square, the pressure is down to this full square here. If we can get up and sit up on top of that with a monthly close, we could potentially attack the highs again. But it's a very similar picture, similar steep angle. Just and a little more.
Ben, what's the full square and the half square values you got there?
So the half square here is at 14,850. Full square down here is around 13.
Okay.
So that's how I'm bracketing it. Looking at the monthly, I think a lot like the ES, we've had a hell of a run. We hit terminal price and time here, which is looking like it's pretty strong and holding pretty strongly. So until proven otherwise, if we can't, sort of create a base here to build off of, the weight of the evidence says down. Anything else you have to add on NQs?
Well, I would like to see a trend line from the 2020 low to the last low. I think that since your other trend line is expired now, it's done. From the 2020 low to that low would say, okay, we're going to give you a chance. Let's see how it works out.
Yeah, I was looking at that one and I almost drew it in, but I was like, you know what? Let's just leave it. But that's how the view is right there.
Yeah, I would like to see that, and when that breaks, that would be just another signpost.
Yeah, another brick in the wall that this thing's coming down. So NQ's similar story to ES. I think we watch the half squares. the decision that's made here will tell us a lot about what's happening going forward. Next, we go to the 30-year. 30-year is one of the few bearish charts we look at right now from a big picture, long-term perspective. But as you can see, we made price and time high here on the half square. The timing was good. Timing's been good on this setting too. We caught this one as well with the timing here. Mm-hmm. We've come down. We couldn't hold the full square, and now we're, made a push up to try and see if we could get the bullish wave going again. And now we've made another low. So the pressure right now is down to the half square here, which is around 147.5. To That's me, a good level. Yeah, the long-term sort of the wind is behind the sails of the bears. It's pointing down. The long-term pressure is down on bonds and conversely up on yields. We broke this trend line, which had been holding, since early 21. We just recently broke it last month. So again, the pressure is building and evidence is mounting that longer term we're heading down in bonds. Anything you see differently here?
Well, I think sometimes charts are easy to read, and this is one of those. So yeah, I think the pressure's to the downside. Probably going to go test that trend line down below. So
right in here, yeah. Mm-hmm. I mean, and if the monthly gets going, you're talking 126 area.
Yeah. Mm-hmm.
Which, as you can see, full square moves are not super unusual. It happens. So that's the bonds.
It's down.
Yeah. Now with commodities, up until this month, there was one commodity that was lagging that on even on a longer term basis, we could say, hey, it's not breaking out. It's not ready to go. Right now, all 12 of the commodities we follow on a monthly basis are bullish, and that bodes well for commodities going forward. So let's start with the review of the commodities, and we'll start with the grains. Here's wheat. And you'll see a similar formation. There were, big downtrends. We based, broke out, and now some of them are making highs and pulling back. But again, the key thing here is the formations that we're forming now, whether they're consolidations or pullbacks or triangles or wedges or however you want to call them, they're all above the previous consolidation. And they're in an area of previous highs that we're just sort of digesting before the next move's coming. The key level on wheat right now for a monthly basis is this half square at 820. You saw when we went above the full square here on this breakout, it took us, 4, 5, 6 months to actually break out. We pulled back and look at the low right on that full square support. And that launched us up to the half. So we're in a consolidation here. And that's another thing. Most of these commodities are consolidating, correcting, sort of digesting previous gains and resting and getting ready for the next move higher. So some point in the next 3-6 months, these different commodities are going to take off again as they finish up these consolidations. This one's in a bit of a pullback. Again, it's bullish. What else do you have to add on wheat here?
Well, look, it's had a 3-month, 3-month corrections are normal for some of the commodities. So we've done a 3-month pullback, and that low is in place. So, well, we're probably going to move higher.
Yeah. Mm-hmm. Just a matter of when.
It's off the lows, right? Off the counter trend low. So
yep.
It looks like we could be starting. So.
Okay, let's go to the next one. Next one is corn. Similar pattern again, right? We made a high in 2012, 2011, sharp pullback, base, breakout. It's already had its pullback, and now we're having a nice move higher here off of that low. And the timing I liked here was right on the half square. Here, your timing was on the full square. So corn is bullish. It's bullish long term. with this run here, we may see, 2-3 months of sideways or chop up and down, grinding higher, but this is bullish. Anything to add on corn?
Well, just a side note to how the basing worked out. You can see, what do we, 3 to 5 years sideways. And then, something we always talk about, the flush or the false break before the big move happens. And normally we're pointing to dailies and, even 4 hours, but look, it happens on monthly basis as well. So you can see it down at the, 2020 lows. You can see it at the highs in 2012. So they happen around the clock, right? It happened at the low in 2016. So I think it's interesting to just go back and study these and see, they're common. And when they happen, you can expect a big sort of a boomerang effect to the other side. And the odds are definitely on your side.
And this is one little chart will show you multiple examples of it. Look at this false break.
And at key points, not just like,
major turning points. Absolutely major turning points. You had one here and a big move down. You had one here and a huge move up.
Mm-hmm.
So I think that's a great point. If you can train yourself to identify these false breaks, look for them, be aware of them, it really helps you, catch a big move and get the direction right. And this is a perfect example. Let's take a look at beans. Beans is at an interesting spot, which is, on our weekly show, I've been talking about how bullish we were on beans in this area and corn and wheat. And I've gotten a little cautious and taken some profits. And this is one of the reasons why is we're up against, a full square on the monthly. But there's nothing bearish about this chart, right? It's coming off a high, build a base, break out, pull back, go, right? So it's more of a pause here and a risk reward call than it is on a bullish or bearish call on beans, because I think beans are looking really bullish. Like we're going to see all-time highs on beans, most likely this calendar year. Maybe we get that, as Barry said, 3-month correction, 2-month correction, where chop sideways here between, the full square and an eighth or the full square and a quarter here while holding this trend line. And that's, I think, again, symptomatic of a lot of the commodities where, we may see a little bit of a pause here in an overall bullish trend. Observations on beans, Barry?
Well, like the other ones we saw, I think this is we're on a full-blown trend here.
Mm-hmm.
I'm fairly convinced, mainly because of look at the basing, right? I mean, 6 years?
6 years, 7 years.
5, 6 years, almost 6 years basing, and we break out, fiercely. And, even if you want to count that first run up, a first wave, and we got a second, this could be the third.
Mm-hmm.
And worst case, just an ABC up. So I think, like you said, if we clear that, the largest square, boy, it opens up the entire upside. And it's possible, if we're going to do it anytime to make new highs, this would be the year. So,
mm-hmm.
Yeah.
And Barry pointed out last time, here's a false break at this high,
Mm-hmm.
major high, right? All-time high, false break.
False break in 2019.
False break right here.
Before we took off. Yep. So,
they're all over the place.
Mm-hmm.
But the grains are very bullish. We are super bullish on the grains. Just think we may be, again, this is for guys like us who play options, 2 to 3 months sideways kills you and it kills options. So for long-term holders, if you hold the commodity or if you're in ETFs and stuff like that, I mean, it's full-blown bullish here. Let's go to the next group. We're going to look at the softs. Here's cotton.
Mm-hmm.
Cotton has been a monster lately. But I think everybody by now recognizes the pattern. A big high, we've come off the high, multi-year base, break out of the base, and then we're moving higher. And this has been a mover. I mean, just steady, consolidate, break out, move again. Right now we're in a bullish position with a close, close above this half square in the like 123.75 area. As long as we're above that, target's up here, 150, 151. So cotton is very, very bullish and in a bullish position. The other thing to notice on a lot of these charts is the pullbacks or consolidations have all been happening above this whole breakout area or above previous highs. And that's really bullish.
Yeah.
I mean, we haven't even been able to get back and touch it. It's, as you say, you got air, and air is bullish when you have air on a chart in this kind of formation. Anything else to add on cotton here?
Well, look, with all these things looking so bullish, we can expect prices to keep going up higher, consumer level, right? So I don't think there's any let up on that. That's
a good point. Anybody who thinks inflation is going to come down quickly, these charts are saying differently.
Yeah. These are setting up long term. These are monthly, and after that breakout off, that little triangle breakout in 21 was just about textbook. Look at that.
Yep.
And now we're off to the races. Just one bar pullback. It's very strong.
Very strong market. Here's the one that was lagging. Cocoa. Bear and I have been saying, okay, we got to watch cocoa for months and months and months because it's been threatening to break out. We still don't know if this is the full breakout yet. We're hopeful, and we'll see, depending on, how the trading goes this week. But this thing has been going sideways for about 7 years, 6-7 years. It's built a little bit of a different base than the others. This is more of a triangle as opposed to that sort of flat base that these other commodities had. But right now we're breaking out of a 6-year triangle. If we hold this breakout, it is super bullish, and it calls for much, much higher prices up here in cocoa. So you chocolate freaks better start storing up before the prices go up.
Or go long cocoa, right?
Yeah, that's right. Or go long cocoa. So key level on the downside is clearly this full square here in the 2570 area. Also, I would say we don't want to come back into that triangle, because if we do, we probably have to come back down here and test. So the triangle level right now is around 2680, 2675. If we can stay, sort of on top of this area here, it should be up and out in cocoa. Anything else you want to add on cocoa?
No, just patiently watching. I mean, it does slosh around a lot back and forth, so you have to really watch your pullbacks and counter trends on lower time frames. Other than that, it's been making higher lows. So ever since 2017. So that's a sign.
Absolutely.
So these aren't instant price swings. This has been going on since 2017, basically. So now we're here.
And this is potential energy.
Yeah.
When you have this kind of price formation for that long, that's a lot of pent up energy. So when it goes, it's going to go. Let's go to the next one. Coffee. Coffee's, again, another pattern that had a long base coming off of a high in 2011. We had this big base, this downtrend, and then we started basing. And then once we started making those higher lows, then you get the curl and then the move up. Here we've been triangulating, for 2-3 months now, and it looks like it wants to run again, and another breakout's coming. The key level up here is around 254. The low here is critical, is around 2 212, I think 215, something like that in that area. And you can see why it's critical. If you look back to 2014, 2015 highs there, we tested that and now it looks like it's ready to run again. So coffee, like the others, is bullish. This is the sort of back and forth stuff that I was talking about that they've been doing, but a breakout should be coming soon in coffee. I know you like your coffee, Barry. What do you think?
Well, I think the breakout already showed up at the second square, right? So now we're just, stay focused and trade the trend. Don't fight the trend, right? Trend's your friend.
And the monthly is higher.
Yeah. Yep.
Let's check the next one. Next off is sugar. Big downtrend, base, breakout on the square. Here we've been laboring at this half square for months, as you can see. Probably 6, 7, 8 months we've been here. We started pulling back, but look where the lows are on the highs in early 2021, and well above this multi-year consolidation down here. So sugar's bullish. If we get above this 1850, 1860 area, that's a major breakout. We probably go up and take out these highs and head up to the full square here, which is around 2340. So I like sugar. I think it's bullish. We got to figure out when this correction is ending, which it looks like it may, if we can get a move up above this half square. What do you think about sugar?
I think it has to follow through with the rest of the commodities. It's same pattern, maybe just a little behind, but they're all at different levels of moving higher, trending. So overall, they're all bullish. So this is just about a good pullback as any. Like you were saying, above the half square, we get moving again. Momentum should shift to the upside. So just like we did at the full square line below, right? As soon as we shifted, we came back, one quick check and off to the races. So these are all generally, the tide is moving that way. So it's just a matter of, getting your systems in place so you can trade the direction.
That's right. All right, let's jump and check the metals.
And that's a rare thing, right? In commodities, we don't trend all the time. You saw these five-year sideways move. So when it's trending, you better get on top of it, or you're gonna have to wait another 3 to 5 years at some point.
Yeah, and, here's gold. Look at this. This is an example of what he was talking about. It went sideways from 2013 till 2019. Sideways, and it caught in this half square. And we've been complaining about an 18-month correction in gold. But this is what they can do. Now, the key thing I keep saying about gold, while it's frustrating the bulls, it's frustrating the bears, and we're getting this sort of chop, look at where all this chop is taking place. If we just take the meat of the chop, which is right here, we're right on top of these highs from 2011, 2012. That's bullish. Right. So yeah, this is frustrating. Yeah, this sucks. Yeah, if you have options, you're getting killed because of the time decay. But here, I mean, longer term, this is super bullish. We're holding the half square, and the half square is in this 1670 area. We're getting held down by the full square around 1925. But the formation and the structure is bullish. And as long as it stays bullish, the odds are it's going to resolve higher. We're going to get that breakout higher. I know you follow gold very, very closely, and we review it. You review it every week on our weekly videos. What else do you have to add here on the monthly chart for gold?
Well, if anybody's been trading gold for a while, they're patient people. So I would say that's the key here, just being patient and watching the overall pattern. And gold will give you every chance to get in before it moves. So you just have to watch the charts and make sure that you're on top of it. And that's the reason we're reviewing every week. And even here, you can see once we touch the half square, the next pullback was a higher low, right?
Yeah, between
And
here and here.
and it's higher lows ever since. So now we're getting close. You do have a tighter trend line that you can drop in there. So we'll see how all that pans out. But I think we're closer than we've been just because of the bigger compression we've had.
Absolutely.
Mm-hmm.
Let's go check out silver. Silver's in a little tighter falling wedge.
Just as bullish though, right?
Just as bullish. I mean, this one just textbook yells out to you. This was the consolidation, just a mere 8-year consolidation, right? 7-8 years we were just banging around in this half square down here.
And a quick false break. Let's not forget that.
There's your false break, right? Take out all the stops, clean out the lows, and then we make the move higher. And then we've been in this, whatever you want to call it, a falling wedge or, consolidation. But notice that it's all on top of this whole consolidation, multi-year consolidation. Mm-hmm. Again, that's not bearish. Structure-wise, that is not bearish. So we're trapped between this, the half square up here at 29, and the full square down here at 21, roughly. But sitting on top of after making this breakout and sitting on top of this whole consolidation, the odds favor we're going to make that move higher. And we're just waiting for price to break out. It's coiling, you can see we're getting tighter and tighter and tighter as the range contracts and contracts and contracts. So the energy is going to be released at some point. And right now, the odds favor it's going to be to the upside. The one thing, though, since this thing likes to do false breaks before it goes, maybe we come down, test this full square, clean out all these lows that we've been making for the last 18 months before it does the move. Mm-hmm. If it does, be aware, watch for it, and see if we get the reversal. If we get the reversal, you go. So anything else to add on silver?
No, I think we're good. The key level there is that full square. We want to stay above that. So.
Yeah, and that's at, call it 2087, 21 area.
And we're right there. It's not like we're far. So it's definitely in the actionable zone. So
let's go check out copper. Another interesting chart, right? Mm-hmm. This had a NASDAQ ES feel, didn't it? The way it was going up.
Yeah.
So now it's been consolidating and really, really contracting in this triangle here for the last almost a full year. And again, look to your left. Look at where the meat of the price action is, right? If we take the right in the middle of all this consolidation, it's right at those 2011 highs. Pattern's the same. Big pullback. Basing for, in this case, looks like 4 years, big breakout. Now we're consolidating. Higher lows have been coming in here on the monthlies. Each month, we've been putting in higher lows, tighter and tighter ranges. The key level here is this full square, which is around 442. The breakout on the triangle right now, this month is around 475, 477. And if we break out, again, you got potential energy here that could, I think, easily take us up to the full square, which is around 562, 565. What else do you have to add on copper, Barry?
Well, I think it's again, like most of the things, it's in a very bullish position. That doesn't look like a top by any means. Let's see if that stands to be corrected later.
Right.
It really doesn't, man. It's just, we ran up, we didn't rebound, we didn't correct, very tight consolidation. It's just bullish. So I just think, again, we've gone through about a year, just about when people, retail traders give up. So I think it's time to watch it, watch the lows, watch the consolidations, and we'll see it moving higher, especially now that it's sort of starting to clear that full square.
Mhm.
Mhm.
And I think you used a good word. This is more of a consolidation than it is a correction in price. It looks like they're just burning off time. And, maybe we have to get to the full square here, which is July,
Mhm.
to kick it off. Who knows? We'll see.
Well, when markets make up price that quickly, normally it has to balance time. So that's what it's doing. So as soon as it's done, we'll probably be on the way again.
We'll get the next move.
Mhm.
Okay, we got a couple more to do. Let's check out crude. Crude oil. Man, this has been a beast. Just a beast. You can see big downtrend. Unlike the most of the other commodities, though, this was more of a V than like a building a large base for multiple years. But the things I want you to look at is off of the low, look at how we get through a square, come back, test it, go again. Get through a square, test it, go again, test it, go again. So it's really showing beautiful bullish trading because it's going up, then it's giving us a chance to get in on the correction. So that's what you want to see from a market. We've gone through another square here on a monthly basis. So we want to watch this. I think it's around 87, 88. Yeah, 87, 90, 88 area. We want to watch this 87 to 88 area on any pullbacks to see if it holds. Because if it holds, man, we're going to the half square, which is over 100. And if we can get through that, 114, 115.
Mhm.
And that's just simple level to level trading, right? We're not making predictions. We're just saying, okay, if it does this, odds favor it's going to do that. If it does this, odds favor it's going to do that. And that's how we try to use the squares. I know you've been all over this crude as a bull, Barry. Where are you on the monthly on crude?
Well, it's still bullish, but looking at the normal, how crude moves, we're probably up for a little bit of a correction or consolidation soon, but not yet. Maybe after next week or the week after that. So I have to look at it. I think we did on the daily chart. We did 45 up, was it? I can't remember now.
I think so.
Go back and look.
Yeah.
Anyway, I think we're getting close to tapping. I think if we tap 96 sometime next week, we'll probably take a break from there. Looks like, we're getting up, like I said, long in the tooth there. So, and we've done 3 sections up, which is normally a good time to take a break. You can see from the 2020 low, we've done 1, 2. This is the third section going up. 1, 2, the third one. So,
yep.
So we're getting there. We're getting to a little break, but by no means is it done. Looking at the breakout of the bigger, larger multi-year correction, right? Multi-year triangle. So, sort of
maybe a pause, maybe a chop around type of thing, and instead of moving, just burning off some time.
But I think 96, around 96, 97 is still in the picture.
Mm-hmm. Which is,
and
right,
if we get there,
here.
might as well touch the half square, right? Make it 100.
That's right.
So,
as markets do have a tendency to go further than you think is possible. That's for sure.
Always. All
right. So the last one, let's look at our old buddy Nat Gas. Textbook kind of pattern, right? And it's fairly early in this move, which is interesting.
Mm-hmm.
Big highs in 2006, crashed down, and sideways base for years. You can say, okay, since here, if we take it from here, it's a 10, 11-year base.
Yeah.
Long base. Broke out of the downtrend line, went up, tested these previous levels of highs, pulled back recently, and a violent pullback it was. And look where it held.
Right on the line.
Right on the half square. Just what you want to see, right?
Now, if you didn't have that, Ben, you wouldn't know what that meant.
I would not. I'd be like, oh my God, get out.
I mean, you wouldn't know what that pullback meant. If without these levels, you wouldn't know what that meant, other than maybe the trend line. But that's just, not that high confidence. So
right. And now we're pushing back up. We didn't quite make it to the square. on this last push, and we pull back. But again, it looks like maybe we're doing some sort of triangulation here, and we're going to tighten up again. But if it does, look where it's happening. On top of here, on top of all this, on top of this, on top of this. Just going to set up for the next move higher.
Well, anywhere above that half square where we got corrected, I mean, that's all bullish above that. There's no
that's
question.
368.
There's no two ways about that. So
yep, 368.
And if you notice how we had this big, it has its own funky sort of a pattern that it shows up, that it shows, and kind of reminds me of maybe how bellies trade and sometimes beans. But if you go back to like 2000, like 1995, look, you get that jaggedy sort of a violent up and downs before the actual big move shows up. Even like 2003 to 5, you see that, really hard ceiling floor, and then, then you get that big move up. So I feel like it's a similar pattern. It's not a downtrend, because it just doesn't have that feel to it. Plus, it's making higher lows. So what do you want?
Yeah, the key is to just be in it when it does one of these spikes and then harvest it.
Exactly.
And this sucker, you got to grab your profits, because it taketh and giveth away quickly. But it's a bullish market. If we're just looking at this, the key for the real big move is going to come off of getting above this, 570 area and sustaining it, because then you're above all this price action for over a decade. And that's going to be a good support and a good base to launch you, up to, 910. And then if it's going to challenge the all-time highs, you're looking at 13, 14.
And that half square below is also interesting. If you look back, it has sort of a mean reverting effect on prices. You can see how it always. So if you're holding above it and making higher lows, that's, at least you're not going to be selling it.
No, absolutely not.
Yeah.
And you're right. It acts, if you put a line here, it acts as kind of a balancing point for price for this whole period back to 2009
or 95,
and even that 95 period before the spike in 03, 04. So anyway, we're bullish on natural gas. You can see why we're bullish on commodities when you step back and take a look at the monthlies, and why we're kind of cautious on the ES and NQs and the 30-year bonds. The monthlies just say that the odds favor the downside, or the risk reward favors the downside at this point. When the price action changes, will change. But right now, the view from the monthlies is bullish commodities, not so bullish on bonds or ES or NQs. Anything else you'd add?
That makes sense too, with the bonds selling off, commodities going higher. What's a little bit lagging would be the stocks. And isn't there a big cycle there where money goes from stocks to commodities and back and forth? So we could be entering that cycle.
Yeah, like the 1970s.
Like you've been talking about with Dale, right? On the
That's
show.
right. Absolutely. So that's it for this week's monthly show. Hope you enjoyed it. The sort of 10,000-foot view. We think it's important. We think it helps us in our day-to-day trading, having this proper perspective on where the bigger picture is. So if you do enjoy it, please like the video, share, ring the bell, do all the things that YouTube likes, and we'll talk to you again next week when we do the weekly show.
Very good.
Thanks, Barry.
Ben. Thanks,
All
Ben.
right.
Good show. Good show.
Take care. Bye-bye.